guys, Nivaldo Soria here again. Last week, I told you why you should be buying your condo now and you should not be waiting until next year. This week, we're going to speak about something very interesting. How to get financing in a condominium in Norway Village and Miami Beach. This is a very common problem lately. Today's date, we have a lot of problem getting financing to buy a condominiums in Miami Beach and Norway Village. And the problem that we seem to have is that the buyer replies to me, well, I've been banking with Bank of America for more than 10 years. We have established a very good relationship, so they will have no problem giving me a loan. So you go to Bank of America, that they are not allowed to say no to any client, and you walk in, they check your income, they check your statement, and they give you a pre-approval letter. And you go back to the seller, and you tell the seller, I'm pre-approved, I'm gonna buy your condo. What happens is, 3 weeks later, you get a letter from the bank that you were not approved because they were not able to approve the condominium. You lost the deal, and you have to start looking for a new property. So, why is this happening? Well, first of all, you have to start by understanding the financing process. The bank will see it this way. They have to evaluate you and your ability to repay back the loan, and they have to evaluate the real estate property, the unit in this case, and the ability of this property to be a collateral to the loan. And in a condominium, remember, the association, the building is part of the unit. So they have to evaluate the unit and they have to evaluate the condominium. You can have a great income, great assets, great credit, but if they cannot approve the real estate property, they will tell you, I'll give you the loan, but you got to find a new property. And why is this happening? Well, the lenders, in order to evaluate the condominium, they send something to the association called the Condo questionnaire. And they ask very specific questions about the building, about his financial situation. But out of these questions, only 4 questions has been affecting the condominiums in Miami Beach and Norway Village. And the first one is, what is the percentage of units delinquent to the condo association fee? How many units are delinquent to the condo association fee? How many units are not paying the association fee? Well, today's date, the economy is doing fantastic in the United States. So we don't have that problem anymore. Okay? So that one is up. But the answer needs to be less than 15%. Even if some of the units are delinquent, they need to be less than 15% of the amount of units in the building. The other question is, does the building have any pending litigation? Litigation with the developer, litigation with the city, someone is suing? Well, the answer will depend on what type of litigation are they having. And then it comes the third question that is being affected. Very important in Miami Beach and Norway Village. What is the percentage of homeowners occupied in the building? How many of the units in the building are occupied by the owner? Okay, and that answer needs to be 50% or more. If that answer is less than 50%, they're not giving a loan on that condominium. And here in Norway Village and Miami Beach, we have a lot of units, a lot of buildings that have many units that the owner doesn't live there. They rent out the unit, annually or seasonal. And that question in Miami Beach and Norway Village most of the time comes that the percentage of homeowners occupied is between 20 to 35%. Okay? So that's a big question for us in this area. And the third question is, does any entity or one person owns more than 10% of the unit? They want to know is one entity, one corporation, one person owns more than 10% of the unit. And the answer needs to be no. Why are they so concerned about that? Because if that entity goes bankrupt or has economic problems, automatically 10% of the unit will be delinquent to the homeowner association. That's why they don't want to take the risk. And the lenders ask all those questions because if they don't get those questions correct, then that loan that Chase, Bank of America, or Wells Fargo made to you, they will not be able to sell it to Fannie Mae and Freddie Mac. Okay? Lenders, big lenders, they make loans and then they sell it to Fannie Mae and Freddie Mac so they can take the money and go back on the street and make new loans. So what happens? So many lenders realized that they were giving a lot of money away to private lenders. That private lenders will give you a loan on a condominium with no problem. You will need to bring a higher amount of down payment, 25 to 30%, and the interest rate is going to be almost twice of what you would pay with a regular lender. So this lender decided to start making new loans, but instead of selling it to Fannie Mae and Freddie Mac, they will serve the loan for the 30 years of the term. So they will say, I'm going to make you a loan, I'm going to serve the loan, and I'm going to sell it to Fannie Mae or Freddie Mac, but I'm going to be able to start making loans in condominiums. And what they did was, they did a new type of condo questionnaire. They did a type of condo questionnaire that they would not ask none of the questions that we went through before. They only want to know with these questions is that condominium is a condo hotel. That's the only way that they will not lend money on a condominium when it's a condo hotel. And this type of lender will give you up to 90% of the value of the condominium, meaning that you only will need 10% to buy a condominium if you're buying it as a primary resident. They will only do primary resident and second home. They don't do investment. Only primary resident. They came out with this type of loan for the type of buyers out there that are not able to buy a condominium. And they pretty much are going to answer many questions, but none of them related to what we spoke before. They only want to know is a condominium is a condo hotel. And that's the only way they will not give the loan in the condominium. So what do you need to get this type of loan? Because it's important for you to know. What do you need to get this type of loan? Well, to get this type of loan, you need to have 10% to put down payment. You need 10% of the value of the property out of your own funds to put in as a down payment. Okay? If you don't have that, you're not able to qualify. The minimum that you will need is 10%. Second, you need to have 700 credit score or more. If you don't have 700 credit score or more, you will not get this loan. Maybe you have 680, 670, they will ask you to put a little bit more down payment, but they will give you the loan. Okay? And second, third, and most important, you have to be 8 years without a bankruptcy, 5 years without a foreclosure, and 5 years without a short sale. Lenders today's day, they consider foreclosures and short sale to be the same thing. So it's 8 years for bankruptcy, 5 years for foreclosures, and 5 years for short sale. And you also need the regular stuff that they ask you in a regular bank. You need two most recent pay stub, bank statements, W-2, 1099, you're a self-employee. So you will need all that. These loans are pretty much new. They started with this loan about like 6 months ago. And a lot of people are learning about this loan and they're taking opportunity about this loan. So pretty soon, the demand for condominiums is going to increase. So it's very important that if you're planning to buy a condo, you take advantage of this right now. Besides the fact that the interest rate, we have the interest rate very, very low right now. It's very important that you take advantage of this loan, okay? Thank you for watching, and I will see you guys next week.